Well, let's take another look at our ag commodity market action. Now that we are getting into the mid-session here, we have a little extra help coming on board in the form of Ted Seifried of Zaner Ag Hedge. He is located in Chicago. Well, Ted, interesting market action here. We started out the day higher on the grain markets and flamed out quickly. Let's take a look at where we are now, and I can't wait to hear your take on what's making it do what it's doing. Let's go to the corn here first. On our quotes provided by Bar Chart, check this out. After being higher right after the open, we have December corn now at 660.5. My goodness, we're down 10.5 cents on the day now. Soybeans, likewise, they fell out of bed. We have November down 9 at 1374.5. And that is basically about 23 cents off of our overnight high now. So it took the wind out of the sails on the soybean trade. Let's look at the wheat market right now in Chicago. Wow, what a turnaround here. You have December down 22.5. We're at 821 3/4. And that would be about 36 cents off of our overnight high. Kansas City wheat, where the planters are going. We have the December contract 16 lower. We're at 885.5 right now. Minneapolis spring wheat on December, we're down a nickel at 8.95. That was like the last holdout. Last time we checked, I believe it was still about a penny and a half higher, and it's given up the ghost. It's gone lower now. On the cotton market right now, new crop December, it's getting the gold star, the only one on the plus side. We have December up 173 points at 103.35. Ted, any idea what happened here roughly about 40 minutes ago or so that caused this market to really sell off in a hurry?
Yeah, Marlon, yesterday was not a great day for markets. It's certainly not a great day for the charts either. When you have that amount of strength and then that all fades and you end up closing lower on the day, well off those highs. I mean, soybeans were 50 cents off the highs. That's not going to bring good technical follow through. Now, we tried to take some of those losses back. We tried to go a little bit higher. We're just not finding any traction with that. And now we're starting to sell off a little bit. It started with a little bit of a correction in the corn bean ratio, which, corn has really gained on beans lately. But now beans are kind of joining into that party. So, yeah, it's just kind of a heavy day. And the seasonality of it, this is sort of the time of year where we would do something like this. You also feel like while crude oil is trying to bounce, but, really not doing a very good job of holding on to gains, at least for the moment, you feel like this inflation off trade is sort of happening as well. Going into the fall and winter months, it's just a little bit of a different feel to the markets overall than what we were looking at even a week or two ago when we were kind of shrugging off the recessionary fears and things were looking good going into the Labor Day holiday and so on and so forth.
All right, crude oil right now, as you mentioned, we have October now $1.02 higher. We're at 82.88. I wanted to take a peek at the natural gas prices because that's a big item on the farms these days. With grain drying coming up, and that could be a big important factor here. We have October now at 787.4 per million BTUs, and we're up about 3.25 cents here so far this morning. So it has eased back from where it was up there, around that $9 or $10 level here not too long ago. What do you see as far as the future in the wheat trade as you look at it right now?
Well, real quick on the natural gas, we've broken $2 off the highs, and we are hugging very key support in the form of the 100-day moving average. And I got to say, that natural gas chart, all of a sudden, looks like it's going to roll over to the downside. I don't know if we hold this support. I've got 640 as a target down there, and that would be a really good thing going into the spring if that could be the case. So stay tuned on that one. But that goes along with the overall, commodity deflation possibilities that I think we have out there. As far as wheat's concerned, we had the breakout to the upside after a very long level of consolidation. I was hopeful that we could follow through on that, but the fact that we're not doing it today doesn't look good. I don't see a whole lot of downside potential in wheat in the short to near to even midterm. But the upside breakout doesn't seem to be really finding any footing here today, and that's a bit disappointing, Marlon.
Yep, you got that right. Okay, we'll come back and we'll take a look at our cattle and hog market activity right after this. Come on back. All right, we're back talking with Ted Seifried, and let's take a look at our livestock trade here right now. And Ted, let's go to live cattle. And with the move to the downside in the grains, I wondered if that had any opposite effect here on the cattle market, and no. December, well, let's start with October. Live cattle, 35 lower at 143.90, and you have December 35 lower as well. It's at 149.72. Both of those are roughly about a nickel from their low of the day. Over on the feeder cattle side, well, we have firmed up a little bit. We do have October now back up at 184.30. So that's about a 70-cent increase off of its earlier low of the day. We're now 32 cents higher from our close yesterday. Interesting how you have more strength in the far out deferred contracts for next year. They're over a $0.50 higher right now. So we'll ask Ted about that if it's offering any clues right now. Lean hog trade, you have October 52 cents lower. We're at 90.55. So it has worked its way back up above 90 cents or $90 again. It was interesting. It sold off, got to 89.12 and then bounced again, kind of similar to what we saw on Tuesday, December, down 87 cents. What do you think about that, Ted? This seems to be kind of a pattern here on the lean hog market here this week.
Yeah, as far as the hogs are concerned, we are really very hard trying to find this near-term bottom. And we made a new recent low here this morning. But as you said, now we bounced back and we're back over the 90. So hopefully this is a longer term, continued basing sort of formation where we can start to bounce. And, as we've talked about quite a bit, Marlon, if we're going to go into this sort of recessionary or economic slowdown into the fall and winter months, I really do wonder if we're going to see hog demand or pork demand pick up. I wonder if you're going to see your Wall Street investors look at hogs as sort of that recessionary trade where people are going to continue to buy protein, but they're just going to look for the cheaper substitute, and therefore pork demand really gets a little bit stronger. So I like, from a fundamental and hopefully technical, if we can close here or better today, I'm starting to like the hogs a bit more and looking at this as sort of a near-term bottom. For cattle, though, this is a really rather disappointing day for feeders. I mean, look how, you got corn down double digits and feeders just can't really hold on to really any gains. Look, now we're down on the day. That's disappointing. We had pulled off the highs. We've seen a bounce. We're not able to really extend on that. Now we're just sitting right on top of a moving average cluster that you have your 50, your 20, and your 10-day all sitting right here. And we're waiting for the next shoe to drop. And really, I think with people's expectations for, again, this is or fears of an economic slowdown, less demand, people being a little bit tighter with their wallets and spending habits and not paying those higher price cuts of meat, you worry that that's going to have an effect on both the cattle and the feeder cattle market. And like you were saying, though, earlier, I think people think if we get into this recessionary period, it could be fairly short-lived. So you look further out into time, into next year, and you do see a little bit more strength on the board there. So lots of things going on, lots of macroeconomics and lots of technical things going on in livestock markets right now.
All right. Well, thanks for explaining all that. There is a lot of interconnection between all the different markets right now. Good stuff. Thank you, Ted. Ted Seifried of Zaner Ag Hedge with us here today. So very complicated marketing day. Suzanne, I'll turn it back to you.